It's quite disconcerting now. The market almost at 20,000 points. It's below what was expected as the resistance level of 25,000. We know that investors are sitting on the fence both domestically and internationally. It's the end of the year, so investors will be cashing in their shares. But 20,071 points, are you worried?
It's not unexpected, really. We expected the market to remain soft in Q4. The sovereign debt overhang remains. Also, towards the end of the year, we expect people who have a bit of profit in the market to probably take some profit at some point. So really, it's not new. It's not a surprise to us, really.
Okay, let's talk about what could lift the market, and definitely on the fixed income side, where the yields have been looking good and attractive. They're going to be looking to the MPC as the central bank makes decisions about inflation. What are you expecting?
With regards to the MPC, I would like to think that we wouldn't see an aggressive rate hike like we saw at the extraordinary MPC. I would like to think that flat to 50 basis point move should be on the cards. And this is really what with the last interview the CBN governor had on CNBC. He did signal to the market that the market could move the handle on the band could move to 155 or 156. With that, we've seen a partial devaluation, and in that case, I would like to think that the basis for keeping interest rates high with the view of attracting foreign investors should reduce somewhat.
Okay, obviously we're starting to see, David, the Naira trading on the interbank market at about 156, the level that the CBN has indicated is probably the new resistance level. Inflation ticked up to 10.5%. Prices likely to increase, particularly as we head towards year end. How are all these variables going to be considered?
Pardon? Sorry, I didn't hear you.
I'm saying, how are factors like rising inflation, Naira's depreciation, how are all those issues going to be considered by the CBN?
Right. I think inflationary pressure still remains with us, with inflation moving from 10.3 to 10.5. 20 basis points, not a huge move. However, I would like to think that it still implies that there is still inflationary pressure. If you also consider the minimum wage as well as the deregulation of the PMS, that's the petrol prices, those put significant pressure on inflation. So I believe the CBN will still keep that in view, and strongly so too. However, with regards to exchange rates, I believe that prices should be around 159. In fact, today the price is traded around about 159, 159 and a half, and I believe that prices will remain around those levels. But one good thing is we do think that with this partial devaluation or managed devaluation, you may see a bit of confidence from the foreign investors to come in to take advantage of the attractive yields, particularly those involved in carry trades.
Let's turn our attention forward. Early 2012, as investors start to reposition, which sectors are likely to benefit here? Because obviously that's when we're also going to see clarity on the momentum and the pace of energy sector reforms and those sorts of things. How's that going to lift the market?
Well, with regards to the reforms in the market, number one, like you mentioned, the energy sector. Number two, reforms in infrastructure. Without a doubt, the building materials business should benefit immensely. Secondly, with regards to lending, we expect the banks to benefit. Here, we'll probably pit our fence with the top tier names, Zenith, First Bank, and GTB. then also the other defensive stocks as well, particularly those who source raw materials locally or who have a low exposure to FX volatility, also would provide a good investment avenue, and also less surprises should there be increase in world food prices, i.e. commodities, wheat, sugar and the likes, and also those who probably are also expanding capacity as well, particularly in the retail space.
Let's talk about some of those, because obviously there's been so much of a bullish sentiment when it came to fast-moving consumer goods in Nigeria. The fact that the population is now at 168 million people, you know, that in general we're starting to see a middle-class consumer class rising in Nigeria, and people have really been very excited about the consumer goods stocks, the brewers, the food producers. With the rising food costs, there is a sense that, yes, their operational margins could be impacted, but generally, these are still the stocks to be looking at. Your views?
Without a doubt, we believe the fast-moving consumer space is where to be at the moment. Consider the demographics. 70% of the population of Nigeria is less than 45. With that in mind, clearly the fast-moving consumer goods sector will benefit immensely. Even though there are pressures on world food prices, the margins still prove themselves, and a lot of these companies have double-digit return on average equity, and we expect that to remain as well. And also, don't forget, this is an emerging market. You know, some of these costs are being passed down to the consumers. You know, and there isn't a lot of competition as well in this market. So we expect established players to benefit immensely from what's going on. So the likes of UACN, like I mentioned earlier, the likes of PZ should benefit with what's going on in the system.